Hey everyone, if you're gearing up for your IGNOU exams, then you are in exactly the right spot. Today we're going to dive deep into a really important topic, green accounting. We're going to break it all down so you can walk into that exam hall and answer any question on this with total confidence.
So let's start with a big question, the one that's really at the heart of all of this. For decades, we've just looked at one number to see how well we're doing, GDP. But what if that number is actually lying to us? What if it's going up because we're chopping down forests and draining our rivers? What if it's counting the destruction of our natural wealth as a gain? Well, that's the problem green accounting is trying to fix. Here's our game plan for this session. First, we'll see why the old way of doing things, our traditional GDP, just doesn't work. Then we'll get into the three big frameworks you absolutely need to know for your exam: SNA, SEEA, and ENRAP. We'll put them side by side to see how they stack out, and then we'll wrap up with some quick-fire revision points, just for you. Sound good? Let's get into it.
Okay, so before we jump into the solutions, we first have to get a really good grip on the problem itself. So why exactly does our standard way of measuring the economy have such a massive blind spot when it comes to the environment?
And this right here, this is the perfect example of the problem. Just think about it for a second. When a forest gets cut down, you've got the money from selling the wood, the wages for the loggers, the transport costs. All of that actually boosts the GDP. On paper, it looks like fantastic growth. But what's missing? The system completely ignores the value of the forest we just lost. Its power to clean our air, give us fresh water, and just support life. It's like an accounting system that only counts the profit from tearing down your house, but forgets to subtract the massive loss of the house itself.
All right, so this flawed system actually has a name, and you've got to know this for your exam. This brings us to our first key framework, the System of National Accounts, or SNA. This is the global standard, and frankly, it's where the problem begins.
So, the SNA is basically the global rulebook. Pretty much every country uses it to figure out how their economy is doing. But that analogy on the slide, it's perfect. Imagine a family celebrating a big jump in their income. Why? Because they sold off all their furniture, their appliances, everything for cash. They're celebrating, but they don't realize they've just gutted their own home. That's SNA. It's great at tracking the flow of money, but it's terrible at tracking our actual stock of wealth, especially our natural wealth.
Now, this table is super important. It really lays out what gets counted and, more importantly, what gets left out. You see, the SNA is obsessed with ownership. If someone owns it and can sell it, like a piece of land or some oil reserves, then yeah, it probably gets counted. But what about the stuff we all depend on, the resources we share? Clean air, the oceans, the ground's amazing ability to soak up our waste. SNA just pretends they're infinite, like they're free. They have zero value in the books, until they're gone. You're definitely going to want to get this table down in your notes.
Okay, and here's a little trick for you to use in the exam hall. When you see the letters SNA, I want you to think strictly no accounting for nature. Simple, right? It sums up the biggest problem perfectly.
So, if SNA is the problem, what's the solution? Well, the first step is our second framework, SCEA. Think of this as the first practical attempt to fix that huge blind spot in SNA.
Okay, now this is a really crucial point for your exam answer. SEA is not a replacement for SNA. It's an extension. It's designed to work with the old system, not throw it out. It's like they added a brand new chapter to the old accounting rulebook. A chapter that basically says, hey, wait a minute, we also need to factor in the environmental costs of all this economic activity. It's the practical fix that countries are actually using.
So how does this actually work in practice? Well, it's pretty straightforward. First, you start with a regular GDP number from SNA. No changes there. Then, you figure out the value of the natural resources we've used up in that year. So, for example, what's the market value of all the coal and iron ore that was pulled out of the mines in a state like Chhattisgarh? Once you have that number, you just subtract it from the national income, and what you're left with is a greener and, let's be honest, a more truthful measure of how we're really doing.
All right, time for your next mnemonic. For SEEA, just think SNA plus environmental and economic accounting. This really helps you remember that it's an add-on, it's not a whole new thing.
All right, let's move on to our third and final framework. Now, if SCEA is the practical nuts and bolts fix, then ENRAP is, well, it's the theoretical dream. This is the one that really gets economists excited because it's so much more ambitious.
See, ENRAP doesn't even try to just patch up the old SNA. It starts from a completely different place, from pure economic theory.
And the core idea is simple, but it's also pretty radical. If something is scarce and it's valuable for our well-being, it needs to be in our economic accounts. It doesn't matter if it has a price tag or not. And just like that, things like clean air or the beauty of a landscape finally get a seat at the economic table.
But that, of course, raises the million-dollar question, right? How on earth do you put a price tag on something like clean air? Or what's the value of the incredible beauty of the Western Ghats? To tackle this, ENRAP uses a really cool and super important concept.
Okay, pay attention here because this is a term you absolutely must know for your exam: shadow price. A shadow price is basically an estimated value. Economists have all these clever methods to try and answer the question, if there was a market for clean air, what would people be willing to pay for it? It's a way to make the invisible value of nature visible in our economic spreadsheets. And this, right here, is the biggest difference between ENRAP and the other two systems. And of course, we need a mnemonic for ENRAP. This one's a little bit playful. Just think of ENRAP as the economist's natural resource accounting paradise, right? It's that theoretically perfect system they all dream about, even if it is a bit trickier to actually put into practice.
All right, we've been through all three frameworks. Now we've reached what is probably the single most important slide for your revision. We are putting them all side by side. So get ready to pause the screen, take a screenshot, whatever you need to do, because this is the ultimate cheat sheet that ties it all together.
Okay, let's break this down. First, look at the basis. SNA is all about standard accounting rules. ENRAP, on the other hand, is all about economic theory. And SEEA, it's kind of in the middle. Now, valuation, this is the big one. SNA and SEEA only use market prices. If you can't buy it, it doesn't count. But ENRAP is the only one brave enough to use shadow prices. The key idea? SNA just ignores nature's depletion. SEEA accounts for it, and ENRAP goes even further and tries to value all of nature's scarce services. And that leads to the scope. It gets wider and wider as you go from left to right, from just the assets we own in SNA all the way to all scarce services in ENRAP. This table is your golden ticket for this topic.
Okay, we're on the home stretch now. Let's do a quick fire revision round to really lock all of this knowledge in. These are the bullet points you want to have fresh in your mind when you're sitting in that exam hall.
Okay, let's go. First, SNA. That's the baseline system, and it ignores natural capital. Got it? Next, SEEA. Remember, it's a modification of SNA. It subtracts depletion costs, but only using market prices. It's designed to be consistent with SNA. Then we have ENRAP. This is an alternative to SNA. It values things that aren't sold in a market by using shadow prices, and it's consistent with economic theory. And remember the two D words. Depreciation is for man-made stuff, like machines wearing out. Depletion is for using up natural stuff, like minerals. Finally, the asset boundary. That's just a fancy term for what gets counted. It's the narrowest in SNA and the broadest in ENRAP. If you can use these bolded terms in your answer, the examiner will know you've really understood this.
So let's leave you with one final thought. As India moves forward on its path to becoming a developed nation, the question isn't just how fast we grow, but how we measure that growth. Which framework should light the way for us? Should we stick with the practical, internationally used CSEA, or should we aim higher for the more complete, theoretical ideal of ENRAP? The way we choose to do our accounting will really define the kind of future we end up building. It's something to think about. Okay, that's it for me. All the very best for your exams.